Now the largest of the lot is Bayly Holmes-Ovcon. WBHO is the way it's normally referred to. Founded by Wilson and Bayly, I think it was, or maybe it was Mr. Holmes back in 1970, put together a bunch of different companies. Pretty experienced player, typically gets the big contractual, commercial, high-end, architecturally complicated work. Also owns a business in Australia, which they call Probuild. I've noticed them doing a few things under the Probuild logo here in South Africa as well. Market capitalization of the largest company in the space, in the sector, in the country, 7.5 billion rand. So that just tells you there have been many, many other companies that have shot to much, much, much higher market capitalization. Anyway, that's how it goes. Price to earnings ratio 10.25. That's a good thing. That tells you it's trading profitably. Dividend yield quite high, 5.3%. So Wayne, start us off on this one.
Look, this is traditionally has been one of the better companies, one of the better run companies. Far fewer problems with Wilson Bayly, but they're in the same environment. You know, what can they do in the current environment? It's very, very difficult, but certainly it probably deserves to be the highest cap. You know, we'll discuss a couple later on that are way worse, and maybe one that's better, but this is certainly of the really big companies, this is one of the better ones.
Yes, and as you say, management has always been well regarded. Mike Wiley was the one who ran it for many years now. Loki Nell is at the helm. The kind of work they get would be like the Standard Bank head office in Rosebank, like the new Menlo and Main Centre for Sun International.
Well, they're in Menlo and Main, they're in Waterfall Park, so they're the big, you know, the listed property companies use Wilson Bayly extensively for these
especially
major
for
ones.
these signature products that are, you know, have big vaulted ceilings and glass all over the place,
fancy,
and seal infrastructure, and the architects getting a prize and so on and so forth, because they've got good young site engineers. They're known to deliver stuff on time within budget. One disappointing thing, though, from the most recent set of numbers I noticed was that whilst Australia was a bright point in the past,
it's not so good now.
For some reason, what you were referring to earlier, margins went from, I don't know what they were.
4 to 0.1 or something.
Yeah.
Like 4% to 0.1.
Almost nothing.
Yeah, no, look, they're having a tough time there. But Australia is no real different to South Africa with the low commodity prices. There's just no activity there whatsoever. I mean, and that's, you know, it's a strange thing to say, but the Australian dollar is weaker than the rand. You can't believe it over the last couple of years, you know, so it's tough in there, and they are battling, and they took a major drop in margin this last year.
Yeah, okay. So now what does one say about this? We know that they've got a fairly secure shareholder base. The share chart looks like that. A little bit of an uptick on the recent results, so they weren't too badly received. You can see there the all-time high for Wilson Bayly. I'm looking here in front of me on my screen here at a 10-year chart. Wilson Bayly, that got like way higher. So what you're seeing there is just the last 5 years. So what you were saying earlier, that boom that we saw back in 2010, that was very high.
You had to own these shares. If you didn't own these shares as a fund manager, you were dead. Now look, I mean, the Australian thing, they've got 4 loss-making projects going on there, but that'll probably change. And one thing about the construction companies I've noticed is that when they get a problem in any contract, they take probably more pain than what they should in that year. So when they know there's a problem, they try and write off absolutely everything possible, so they get all the bad news out there in one foul swoop. So they'll probably recover in Australia, and we certainly hope that the commodity market doesn't get worse. So there could be some upside, but they've got, as we've mentioned, they've got a few really nice long-term good projects here in South Africa.
Yeah. Because, look, to be fair, the kind of work I think that Probuild does in Australia is similar to the stuff down here. It's a combination of housing, commercial buildings, and the Australian economy, whilst it's somewhat weakened, is not exactly,
it's not exactly
going to sleep.
Yeah.
Okay, so they've got 38 billion rands worth of order book here. That's fairly constant.
Yeah.
If you were going to buy any of these, it would probably be this one. But do you buy them now? Do you sense it's hot or not now? No?
You know, if you were truly a long-term, deep value investor, I mean, these things are going at bargain basement prices, but what's going to turn them? Now, of course, you never know what's going to turn them before it happens. However, the outlook doesn't look good. We're going into a rising interest rate cycle. And rising interest rate cycle generally is not good for these type of shares. Secondly, we know the government's got no cash. The government's short on money. So all of these much discussed trillion rand, 800 billion projects are just not happening.
So things like, say, a nuclear build or extended road infrastructure developments,
just not going to
they're
happen.
likely all just going to sort of slip
Be
out a
pushed
little bit.
out a little bit.
Government's just a little bit anxious about
even
cash flows.
Eskom's winding down now. You can't believe it. Although they're not online yet, their big bulge in expenditure at Eskom's actually also over.
Madupi Kusile, sort of the python is now the chunk is working its way through the snake.
Yeah.
Okay, so you're going not hot
I'll
on
go
this one.
not hot, yeah.